Hi, Doc Severson here for the Theo Night Report for Thursday, January 26th. We are deep into earnings season now, and this is what we're starting to see is after hours like Google in this case actually went from about 8.55 all the way down to 8.22 and continues to be a little bit soft after hours here. So that may have an effect on the market, although it really hasn't taken much effect on the S&P futures right now. In addition, Microsoft reported after hours and is moving around quite a bit. First negative, then positive, and so far back to just about unchanged again. So we'll see where this one ends up tomorrow. And lastly, it looks like Starbucks is going to be taken out back and shot as it's gone from about 58.5 down to 56 and change. I mean, this actually looks much worse than it actually is, being down just a couple of points. And we'll probably have more market movers tomorrow. We have another 56 companies reporting. Companies like American Airlines, Abbott Labs here. We also have Chevron reporting and several others tomorrow. So tomorrow there's no break from this as we get into the meat of the earnings season really over the next week or so here. Now, as I move over to the charts, the chart I want to start by looking at today is the Dow Jones Industrials. Of course, yes, it hit 20,000. It's no longer any news anymore. Bob Pisani has to find something else to do now instead of sit there and watch that number every day. But in looking at this, the closest parallel that I can come to for this extreme rally that we're seeing here is really the same thing as to when we got past all that noise back at the end of 2012, which was the fiscal cliff and the sequester and all that other negativity. People thought we were going to walk over the edge, and next thing you know, we tack on about 2,500 points on the Dow over the space of about 5 months it took for that to go before we had any kind of significant correction. And in this case, the correction was only maybe about 1,000 points, which wasn't that bad when you look at this in the rear view mirror. So we've actually gone about a little over 200, about 2,100 points so far in the space of just over 2 months, almost 3 months now. So this one's actually almost setting new records in terms of the slope of this advance. But you can see that we're also very close in terms of looking at the linearity of the move. Linearity of the move shows me basically how straight this line is. And what we have found out through study of previous chart patterns is that when we get down to a level around here, so it's extreme linearity, this is typically when we start to see a little bit of corrective price action coming into the charts. Now, a 1,000-point move at the time doesn't seem like just a little bit of corrective action. And if we do actually drop down 1,000 points from this level, it's going to put some people on notice. I don't think they're going to be ready for that, and you're going to see a lot of the mainstream press talk about potential bear markets and everything like that. Well, this is not anything other than what a very normal pattern that comes into play at this time when we have such an extreme amount of linearity to the move. So the only thing that's going to ensure that for it to move is for people to quit looking for the pullback. I think we've been all the way up here looking for the pullback, and now we've gotten 2 to 3 days of breakout. Perhaps people will start going back into euphoria mode, and maybe we will get a chance to get a pullback, which is going to light up some of the volatility. I'll get to that in just a minute. But right now, looking over at the daily chart, we're starting to see potential signals. So this is not quite what I would call a shooting star candlestick, but definitely we're starting to see a little bit of an upper wick to the price action here. And that shows that the highs are being sold into. So when we start seeing more and more of these, the highs being sold into, then what I'm going to be looking to do is at least taking a short term, what we call an in-out spread. So this is going to be a bearish spread, just looking for about a 50 to 60% return on this on a move back down, just to get some mean reversion into the chart, allow it to rest for at least a week or two. So we'll see whether or not that shows up, but I'm going to look for the initial candles for me to know when it's time to make that move, but it could be almost any day now. And perhaps we're already starting to see this in the Russell 2000. So while every other stock was going berserk today to the upside. We had the Russell actually selling down about 0.5%. So we are starting to see a little bit of divergence here amongst the assets, maybe a little bit of splitting, perhaps playing into a potential Paris trade down the road. We're going to be doing a class on that in about a week. So I'm going to finish up tonight's report by looking at the VIX. Now, for all the flaws that this instrument has, at least it does give us some level of reference for sentiment here and complacency. And the last time that we had a real issue with this was back here at the end of 2006, early 2007. If you recall, if you go back on the chart, we had a very, very quiet, just sort of relentless, consistent upside trend that just didn't seem to quit for the last 4 months of 2006 and almost 2 months of 2007. So that stopped with a big hurry here as we had a nasty one-day move, which actually stretched over a couple of weeks or so before it finally moved back. But you'll notice that this started to actually move up a little bit even before that occurred. And so right now we are very close to those all-time lows on the VIX down there at about 9.4. We're sitting about a point above there. And what I'm going to be looking for is if we do set some new low on there, I'm going to be looking for this to start diverging to the upside a little bit. And then that's going to be a warning that perhaps somebody knows something and getting ready for some corrective price action. So we'll see if that occurs. So look forward to tomorrow's volatility and more earnings. The beat goes on. Thanks for listening, folks. We'll talk to you soon.